Rob Stone, 2 damn phones, Babylon can't crack the code.
Welcome to B-MoneyTrading. This is Q&A Wednesday. Basically what that is I get on Facebook and look at some trading groups and some posts that people put up. I keep it anonymous, so I don't put anybody out on Front Street, but I do kind of give the take on the questions they ask or comments they make and my experience on the matter. And hopefully this can be of some benefit to you. And if there's any experience or knowledge you have on the matter that may be of benefit to me, then please leave it in the comment section below. And with that said, I'm going to jump into that in just 1 second. Just give you a quick update on how I finished the day. As you can see, I finished the day up a little over 45 bucks. I guess technically 45.06, which isn't a whole lot, but we're just looking at and if you've been following me and watching the videos, I consistently talk about focusing on not losing money, on managing risk and limiting your exposure, not being too big on one position in your account, and really having a plan on the trade and what you're doing. With that said, one of the biggest positions I have is TQQ, and I try to ideally keep a position in a trade no more than 10% of my portfolio. This one's at 31%, as we can see down here. I'm down 83 cents on the position, and we can see today it made its turnaround and it's hitting this key point, which is being resistance. You can see in the past it was resistance, and then it became support, and was support here, and then went back to being resistance as of today. So anyhow, with that said, on Q&A Wednesday, go ahead and start this off. First one says, and this is like the big news for the week, is IGC getting delisted off the New York Stock Exchange as well. Earnings coming out on Amazon, and people trying to gamble whether they should buy puts or calls. And it's basically what they're doing when they're sitting there asking, should I buy puts or calls on these trading groups on Facebook, then it's gambling. You obviously, it's not trading if you ask me, but that's just my opinion. Anyhow, it says IGC killed me, sold yesterday with losses, 3,000 at price 70 cents. Today it is at $1.33. Thanks. And if IGC, if you did your research, there was news prior to this. It was actually the head of it was on I think it was like one of the major news networks, like CNBC, Money something, and there was a lot of questions and speculations if this was a legit company or not. And if you'd done your research and looked before buying into such a low price penny stock, I'm holding ACB, which some would consider it a penny stock, but I've also looked at the balance sheet, and the history of it, and seeing how legit are they, and the potential for this long-term trade to make me some fairly good returns for investing such a low amount of money. And so, with that said, this is one of those deals that was easily avoidable, and maybe a lack of experience as far as risk and research and trying to find out more information on the company before investing, especially 3,000. I'm assuming he's saying 3,000 shares at the price of 70 cents a share. I don't know if he's saying he lost 3,000 or if he had 3,000 shares and he sold them for 70 cents. He didn't specify how much he lost, but Either way, that's neither here or there. It was, and I talked about in an earlier video today about doing these penny stocks, these trying to get rich quick and grow your account at this like rapid rate, and basically just trying to be realistic and open and honest with you. And sometimes it may be a bit harsh or come off harsh or too straightforward, but it's just the reality of it, that you have all these people trying to sell you things, these programs and these strategies, and you trade this way and that way, and all the strategies that I've come across, and I've paid for like training courses on trading and different people's, and at the end of the day, basically all this stuff is what you can find for free on YouTube. With some networking and asking some questions, some basic simple questions, you can get a lot of this information for free, and there's no substitute for experience and screen time. No matter how much you pay, no matter how much paper trading you do, there's no substitute for how you feel when you have a loss. You basically have to have a loss, and then you know how you feel with those emotions, just like whenever you have a win, you make profit. So with that said, we can look at a few of the comments. Oh, this is a good one. This is a good one. I like how this guy thinks. This is exactly how as I was just saying. So he says in his comment to this IGC guy that lost, money, sold at 70 cents, 3,000 shares, sold at 70 cents, whatever it was. I don't know what he bought in at. And then today it's up $1.33 or something like that. It's going at $1.33. Anyhow, he says, so your conclusion is that it was a mistake to sell it, not that it was a mistake to buy it. And that is, that's the cream of the crop right there. You still don't see, Google IGC class action lawsuit. Sure, you'll find something. Bam, do some research. This person used some harsh language, but he said, I feel like what the CEO said about being investigated for security fraud, which that's what I was trying to tell you about. It was like on CNBC, finance, some, major network, financing, money, whatever news show that they had him on there, and they're asking all these questions about it being a fraud and a not legit company, and some of the things weren't adding up that they were putting out as far as their their expenses and whatnot. So moving on, this guy says, what stock to buy during war? We've been at war unofficially for a long time now. I don't know why I'd be bringing that up now, but that's just my take. So I sold all my stocks and looking for a fresh start, need new stock. All my other ones kept going down. Let's see some comments on this. Someone says U.S. government bond, ? Sell the rest and short the entire market. Good luck. This guy says, wait, the worst thing you can do is hop off a slipping slide only to hop back on another one. Options, shorts, all day. Someone else says HMNY. My thoughts are, if you just got done selling all your stocks because they were all going down, I would recommend stepping back for a few days, maybe even a week, and doing some more studying and researching and seeing perhaps where you went wrong, what you can learn from that experience with whatever stocks you had and the trades you were in. People recommend having a trading a trading journal, so that you write down in here. Basically, if you're like this one guy I talked about earlier today, he's having issues sticking to his trading plan, and what he was doing is he would get into a trade and then he'd get on stock twits and look at that stock and what people made comments about it, and maybe he just bought into it and everyone's saying, oh, it's going down, I'm shorting it and this and that, and so then all of a sudden he'd get in fear and he would sell because he was influenced by what he was reading on there. And so they ended up selling and taking a loss on it, when if he would have just held, he would have made money. But because he didn't stick to his game plan and he sold, and then it ends up turning around to where he could have made good profit, that now he's scratching his head. And I'm not condemning him, I've been there and done that. And so I'm real cautious about what I read and whose advice I take, because ultimately people try to mimic other people's trading. They get on these groups and people say, I'll post up all my trades before I take them, and so all you gotta do is follow my trades and you're gonna make money. And I'm just gonna keep it simple. You can do that and you'll learn real quick why that doesn't work. And ultimately, the whole point behind trading is so that you learn how to do it, so that it's like what's that saying, I can give you a fish and feed you for the day, or I can teach you how to fish and you can feed yourself for the rest of your life, something along that lines. I probably had it way wrong, but you get the gist of it. Basically, you're trying to learn how to trade. You're not trying to learn how to mimic somebody's trading, but you're trying to learn how to trade. Now, watching someone else trade and seeing why they're getting in and out and understanding and getting a better experience, that's one thing, but it's another thing to look and lean on somebody to make you money. If that's the case, you might as well just save up some money and put it in a hedge fund, and save yourself the time, but if you're really trying to learn how to trade, then I suggest, like this guy's saying, he's looking for people to give him suggestions on stocks to get in. And, at the end of the day, it's going to be you taking the loss and it's going to be you taking the profit. And so I suggest, if you've just had to sell all your stocks because they were all going down, then you should step back and maybe start keeping a trading journal and come up with a game plan. And then when you go to look to sell, you say, okay, what was my game plan on this? Oh, okay, I said I was going to sell if it got to this price point, or if it hits the stop loss. Well, it hasn't done either or, so why am I selling now? Now I either know something that nobody else knows, some type of fundamental news that's coming out that it's gonna, but even still, then I still have my stop loss, unless I'm afraid it's going to do it in after hours whenever my stop loss won't go into effect, or it's going to do it in pre-market to where my stop loss won't be executed because it's pre-market or after hours when the market's closed and I'm not able to trade. And I talked about that in the earlier video today, about that's one of the things that retail traders have against them is their access to the market is not as high as the people with big accounts with these big brokers. So you have to learn to start learning the rules of the game and learning a strategy that benefits you, that you can work within these limitations to make money, and so with that said, we're going to move on to the next one. I was going to try and keep this pretty short. I wish I would have kept a better track what time I started this, but moving on. This guy, he's asking, how do I sell my free stock? I'm assuming Robinhood or Webull or whoever gave him a free stock for either recommending someone join or whatnot. This guy asks, those of you who invest, how do you do it? All at once, half, 1/4, 1 by 1 share a day? Comment below. It's a decent question. It's one of the better questions that I've found on here. Just trying to get a feel for how people prefer to invest and what's worked for them. And there's no harm in asking, depends on the stock market volatility at the time, but usually dollar cost average over a certain range of days. I do what you aren't supposed to do, which is use your entire portfolio on one stock. When I do downward pyramid positions where I'll do 100 shares at one price, 100 shares at another price, and 100 shares at another. So basically you're scaling in. You can call it pyramid positioning, whatever, but you're just scaling in. Which that's not bad. Some people say, oh, well, you're just adding to a losing trade. Well, if your plan is to get to you want to buy in at this price and it's getting close to it, and you're being a little bit impatient, and you're like, I'll go ahead and buy 100 shares, and then if it gets 5 cents closer to it, or it's 5 cents away from that price that you want to buy in at, then you go ahead and buy another 100, and then once it gets to that price, you buy another 100. The only thing is now is you have your average, and so you have to look at your average, because it's not going to be at the same price you bought your first 100 or the same price you bought your last 100. It's going to be a mixture, obviously average. And so then you're going to look at your average, and now I have my average, and if I would have bought it at the price that I was looking to buy in from the get-go, how much am I willing to risk on this trade? How far does it have to go down before I say, okay, it's time to get out and take my loss? And I've traded like that, and I still sometimes I do that with some of these positions that I'm investing in. Now I don't do all my portfolio in one stock, but I will. If I see a certain stock that I'm really interested in, and it's getting close to a support area that is shown in the historical data, the daily or the 4-hour or an A-day, that its previous support, for example, if it's getting down, we'll have to zoom in, do a quick example, but say I know that there's a support and it's getting close to it, then I might buy, a few shares, and for me, I'm taking such small position, it may only be like 2 shares, depending on the cost of the stock and how much I'm willing to put into it and risk and whatnot, and it depending on how much I want to make up my portfolio. So, even like this, I might buy like 1 share up, at the and we know like whole dollars and half dollars seem to be a point of, interest among most traders. So I might say, 53.50, it gets around there, I buy my first one. If it gets down to 53 or 53.25, or I might buy another one at 53.25, and then my last one at 53 even. And then if it drops below 52, then obviously I was wrong about this trade. Now it depends on my hold time as well. If how much I'm risking, is this just going to be a day trade, or is it going to be a swing trade, or a short-term investment, long-term investment? And so if it was going to be like a day trade, then I'd say obviously if it broke 52, then I'm going to get out. Now it's only 3 shares. I think the average would be like what, 53.25. If I bought one at 53.50, one at 53.25, and another one at 53 even. So I would end up getting out and taking that loss and being patient and waiting for a different opportunity. But like how I'm trading now, I'm not doing day trades. I've been there, done that. There are opportunities. It's just not my. It's not my cup of tea. I'm trying to be a little bit more conservative and take small positions. I've already kind of explained my strategy in the first few videos that I've posted up, and so we're gonna move back on to Q&A. I kind of got off topic. Sorry. This person says, I buy high and sell low. Works every time. Obviously they're joking. A good rule of thumb is to never risk more than 2% of your portfolio on any trade. You can adjust your comfort zone. Now, when he's saying 2% of your portfolio on any trade, that's not meaning what the position makes up of your portfolio. Like, I'm taking 10%, ideally. This one's below 10%. My portfolio, it probably was about 10 whenever I bought in, but because I'm down, it's only making up 5.87%. So basically what they're saying is if I went in on balls deep on this trade, and basically it went 2% against me, I bought IQ at whatever price, and it dropped 2% from what I bought in at, that it's time to get out. And the problem with that, well, we'll go into further, we'll do that another time. I don't want to take up your time. I need to wrap this up. It's starting to get late, and people tend to not want to watch YouTube videos that are 30 minutes long, an hour long, so this guy, apparently he's reading The Intelligent Investor. I haven't read it. Now, I've listened to the audiobook on YouTube of The Reminiscence of a Stock Operator. And basically that book was written about Jesse Livermore's life, from my understanding. And it's very good. A lot of stuff to be learned in it. It's back from an older time, back in the day when there wasn't high frequency trading, black boxes, the algorithms, to where you could trade. It was the old school back in the Great Depression and all that, and the tickers. But anyhow, I recommend, if you're at work and you're bored and you can listen to music or whatever, then I'd recommend putting that in and listening to it. That's what I do at work sometimes. Might as well learn something while I'm working, trying to make money. That's going to benefit me in making more money. With that said, this guy says, hope everyone took advantage of the dip. I think it's going back up by the new year. And I told you my thoughts on the market and what it was going to do. Overall, and basically, I was telling you a day or two ago that I believe it's going to stick to a range. Within, maybe it'll break it tomorrow. I said, within the next 2 days or so, that it would possibly break the range, but I think it's going to stick in this range. They might try and break above it a little bit. It's just so tough to tell with the elections coming up. And then, you got the big names like Apple coming out with earnings. And so that's going to kind of, that could have a big enough impact to kind of alter the momentum of the overall market, which to me, if a company is that big, to have such an impact, that, is that really free market? Kind of like, the housing market crash and all the big banks and getting greedy, and they end up going under and getting bailed out, which the taxpayers paid for. And my deal is I just don't think it's right for a company to be so big that they're too big to fail. How is that, a free market when you let companies get too big to fail? So if they screw up, basically you have to bail them out unless you want another Great Depression, Anyhow, we won't get on that tantrum. Moving on. This guy was temporarily blocked from posting to this page last week. That he says, this is my favorite page to stay in touch with. I don't know why I was blocked, but if I broke any rules, I'd like to know what. And he's trying to get the administrator's attention. I like to open up a Facebook page, trading group, but I'm still trying to figure out how I want to do it. I kind of want to welcome new traders, but I don't want a whole bunch of, I know this sounds bad, but I don't want a whole bunch of dumb questions posted up, like what's the PDT rule, what's a stop loss, or these are things that you should be looking up and asking on YouTube and researching yourself, and instead of just trying to take somebody's word for it, try and find out for yourself. These are things that I would recommend. Maybe asking in a private message or something. But as far as, I don't know, maybe I'm just being too critical. This person's asking sell or hold cannabis. My belief with cannabis is that it had its peak. I mean, it took off, and then everyone's saying you missed out on it, and it then ended up selling off. These things take forever to load up. So anyhow, my deal with cannabis is it's gonna be a long-term trade. I'm holding. I have some invested in it, but not. Like I said, I'm not going all in. To me, it's gonna be a longer-term trade that possibly add on a little by little over the course of time, and maybe this is one of those deals like the big pharmacy, like P-Fitzer or something like that it's gonna I bought in at $7 a share or whatever, and now it's going for $80-something a share. It'd take a long time, I think, for it to get to something like that, but I believe the potential is there. It's just which cannabis stocks are going to make it and which ones aren't. That's really the question. Warren Buffett, he talked about it in his early days of investing about all these automakers making cars back in the day, and a lot of them you didn't hear about because they didn't make it, but they were on the New York Stock Exchange, and so the toughest part was trying to figure out which ones were going to make it. So you knew to invest in them, like Ford, GM, Chrysler, his take was it was easier for him to figure out which ones were probably not going to make it, and that would help him narrow his scope on which ones would make it and which ones wouldn't. This thing's still trying to load. I'll just go ahead and pull this off and pull this one on. I'm having to, because Time Warner likes to update their stuff in the middle of the night. I'm having to hotspot from my phone onto my computer right now. So anyhow, I think I'm about to wrap it up. This has been a pretty long Q&A Wednesday, but I put in the video earlier that I would put out. Also, I meant to do this at the start of the video. Maybe I'll do it at the start of the next one. I wanted to give a shout out. I'm going to pull this down. Give me 1 second. 1 second. There we are. Oh, okay. I want to give a shout out to Edward L. We'll just keep it like that. Edward L, new subscriber. Appreciate your support. I'm thinking about trying to do something for new subscribers. The first few that are coming in to this channel that are supporting it, as far as like I have I put on a few videos. It's an Eat, Sleep, Trade, Repeat coffee mug that I'm looking at possibly offering for free. I would have to get your mailing address, obviously, and it's if you don't mind giving that out through email it to me or private message or whatnot, then I can mail you off and I'll put it up tomorrow, the mug, and maybe work something around that. But anyhow, with that said, have a good night, and we will pick up tomorrow and see what the market is going to be like. So today wasn't a bad day. All about progress and making money, whether it's $5, $10, $20, $45, $100. Focusing on not losing money and looking for quality stocks that are undersold, that and it's that simple. We're looking for things that are basically undervalued right now, and in the future we believe that they're going to be worth more, preferably a lot more than what we bought them for now. And it's just that simple. I know it's easier said than done. If it was that easy, then we'd have bukus of millionaires on Robinhood and these groups, but finally loaded up. So anyhow, have a good night and happy trading, and I'll see you all in the morning. Talk to you later.